Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and this is going to be another one of our daily cryptocurrency market updates. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets, and that's exactly what we're going to be doing in this video. Quite a big day for the broader markets with the US CPI coming out half an hour after the release of this video. We are going to be looking at that, looking at the expectations, relating that to the dollar. We are going to be looking at the broader markets, and we're actually going to be talking about, at the end of the video, what I think is going to cause the next kind of 2008, which we don't think is going to come until sort of the end of 2024, 2025. You guys will know that our analysis on the markets are that we are going to have a decent time for risk on assets. It's going to be accompanied by potentially the dollar going down up until a crash occurs, just like historically has always been the case. But we will save that for the latter half of the video. To start the video off, I, of course, want to dive in to the XRP Blackrock ETF filing falsity, although there are conflicting reports. However, I do believe Blackrock themselves have actually denied this. Let's get straight into that and start the video off there. So the same individual that broke the news on the Ethereum trust being filed in Delaware also broke the news on potentially, he says, not sure, this can't be real, iShares XRP trust registered in Delaware. So this person had a lot of credibility in regards to dropping the first bit of information. Now, of course, she dropped this. You can see it looks legit, looks very similar to the others. However, you did have the guy who confirmed the Ethereum ETF actually come out and say this is a false alarm, confirmed by BlackRock, by me. Some wacko must have added using BlackRock's extensive name, etc. Come on, man. Some people questioning whether BlackRock actually confirmed to me this is false. They did, a spokesperson confirmed. If that's not enough and you are still raging, please seek help. Very interesting. You've got to love the crypto. You've got to love the internet, right? Haven't you? Because if nothing else, you can get a laugh from it. And of course, people will be doing this. I can't help but feel like people get trades out of this. You know, someone would have gone, okay, let's long at the point of this. And then, you know, take profits. And XRP's price, very much, let's go over to a crypto chart. Let's pull up an XRP chart. USDD, I'm not sure what's going to come up there. You know, it did quite well yesterday and then retraced it all, obviously, with the news being full. So a bit of a shame. However, don't be too disheartened because you are going to have altcoin ETFs. You know, it's probably going to go down a similar path of what Grayscale's products have gone down. We are seeing real demand from institutions coming back into the market. Please, if you didn't watch yesterday's video, take a look at that. We suggested that this initial rally is largely institutional driven. Retail has not arrived yet, which is a good sign for us. But you are going to have, just like Grayscale offer different trusts, different ETFs. So Ethereum's a major step. We're going to be doing a video on ETHgate later on, looking at, of course, the Ethereum ETF and relating it to the broader kind of ETHgate narrative. But you will have altcoin ETFs eventually, so do not fear. Let's dive into the traditional markets. Well, let's actually go back. Let's finish off on Bitcoin. We will be talking about Bitcoin when we look at the traditional markets and relating it. Bitcoin having a bit of a pullback today. Expect it, guys. Markets do not just go up in straight lines, and Bitcoin has done very, very well, certainly since we started getting back into the market. You know, you are up. 5th of January was our public call. 111%. And this has been a very explosive move. We have looked at the fact that you've ran into your first real bit of volume. We did say that the sort of 30K to 35 level would get taken pretty quick based on the volume profile that you had there. Now you're running into your first sort of significant bit of volume. And with the likes of the CPI coming out, you're going to get hedging, you're going to get a number of things. Let's move on to that in regards to the dollar. Altcoins will get thrown around with Bitcoin, unfortunately. That's how it goes. I think people often forget the nature of the beast that we're dealing with when it comes to the crypto market. Altcoins can move 10% a day. I prefer trading traditional markets to the crypto markets. Yeah, the crypto markets offer a lot higher return, but the volatility that comes with it, you know, if you're not a kind of day trader scalper, can be quite hard to mitigate, in my opinion. But let's get on to the traditional markets because we've got lots of news coming out today. First thing I want to start on with that's kind of related to inflation is Goldman Sachs reduces its Brent oil price forecast due to increased supply, a lower heating demand, and positive surprises in OECD commercial inventories. This is the dollar. And narrative and analysis on the markets is largely going to, it's not centered around the dollar going down, but that needs to be a factor. And we looked at a broader channel for the dollar that, it may want to slip to the downside of, we don't think a crash comes until later on. Fundamentally, where we disagreed with the bears, we've acknowledged a lot of the storms that are going off, the smaller storms, but as a bigger picture, we've assessed that it's not a storm yet. It becomes a storm later on. And that's just fundamentally where we've been able to disagree and make money in opposition with the bears. You guys want to find out what I'm buying and where? Please do consider becoming a patron. You've got my full portfolio along with positions, average buys, and where they currently are. So today, of course, is the CPI expectations. The last one you had was 3.7. The TE forecast and consensus is 3.3. This is generally pretty right on the consensus. Lower CPI print is likely going to implement or indicate a lower, and I'll get the Fed watch tool up, Fed funds rate. You are having a lot of people calling for pretty aggressive cuts in the year ahead, but you can see that this is for December's meeting. This is for January's, for March's. So it's pretty much set for cuts for rates to basically stay where they are. Go and look at, we won't do it in this video, the history of rates going sideways or stopping, and the likes of the S&P typically going and putting a new high. And you can see we've got, we're starting to get more into potential cuts. They've got a cut actually as early as, cuts starting to get quite aggressively priced in May and June. And actually, we'll cover this in just a second. Alphabet looking to buy Go Cardless, which have hinted in the past at sort of crypto. Alphabet, one of the biggest companies in the world. Everything's going crypto, guys. What was I looking for here? UBS sees a raft of Fed cut rates next year on the back end of US recession. We're going to cover what I think causes the shitstorm and the yield curve in just a second once we've got through this. So today, it's likely, in my opinion, you're going to get a lower CPI print. Main market to watch, of course, is the dollar. You've broken out. This was a key event on non-farm. You've essentially back-tested it. And now I think you're going to see that further continuation like we've seen previously. That's my bet, and that's going to support risk, although crypto may want to take a bit more of a break before it gets rocking and rolling. Stock market running into key levels. Also, you guys know that not only do we have theory and history behind why we're long, we also have technical analysis, which is something we champion. People think technical analysis is like voodoo or something like that. I'm a living testimony that it's not. There's many others of us out there. And I would definitely argue that the people that say this really have never really given it a fair shot. And just because it hasn't worked for them, they've assumed that it hasn't worked, full stop. We're very good at forgetting our insignificance as humans. Anyway, so CPI today, certainly going to be interesting. Dollar's the main market to watch. Of course, that's going to have correlations with risk. Coming back to crypto, you've done a lot. You'll be getting divergences and stuff like that here, I would imagine. Oh, I don't know why they give us all these other indicators. Just if I type in RSI, yeah. So due a rest potentially, altcoins, it could be quite shaky, but ultimately that's probably going to set up for the next leg, and we hope everyone's in a position to take advantage of that. We did pull up a chart of, or a news segment from Alphabet. Backed, Go Cardless considers takeover as CEO expects a barrage of consolidation. Very interesting how Alphabet are getting involved with Go Cardless. Everything's going to be cardless as part of their agenda. You've also got Morgan Stanley's Mike Wilson, very bearish character in my experience, coming out and now actually saying he's raising his expectations of the stock market next year. It's very interesting how we've had this analysis on the market that's been technically, fundamentally, and historically driven, that a lot of people are now getting in line with, and I think that's really going to propel the markets. People were very bearish when the S&P had that retest. We were looking at it as a retest. It confirmed. when you get confirming data, you go with it. You don't sort of ignore it because you feel one way or another about it. You know, if we get data that comes in that suggests we should be out of the market, believe me, this channel will turn bearish on a dime, providing that argument will overweigh the one that we're currently holding up. And also, you know, testimony to that was how we were out the market in 2022, and saved a lot of heartache. Let's talk about the big demand destructive event that's coming. So this also ties in with part of our theory on how we think the markets are going to play out. You're going to run basically up until a crash. And this has a lot to do with the laggard effect of rates. And this is perhaps a testimony to that. So an unprecedented $8.2 trillion of US debt will be maturing in the next 12 months, or 1/3 of the total treasuries outstanding. That is 3.5x more than what was net issued so far this year. Keep in mind that fiscal deficit next year would also require at least $2 trillion in addition to the $8.2 trillion that needs to be reissued. Bonds are in real trouble. When you think about JP Morgan, Larry Fink selling their shares for the first time in a long time, this is likely why. Banks are in trouble. The system itself, the debt-based system, is in a lot of trouble. I think the yield curve is predicting, and we'll pull the yield curve up if we're going to be speaking about it, is more than likely predicting a debt crisis. I mean, that's so vague. A shitstorm in the debt markets. Where is my... By the way, we haven't shown this chart in a while. Just to throw it into the mix. This is kind of a representation, I guess, of liquidity. My bet's this going to go up. And actually, what's going to be driving a lot of this is things like this. But to go to the yield curve, you know, this is the steepest yield curve that we've had in the past 40 plus years. This is predicting something big. My bet is it's going to be the shitstorm that's caused by a refinancing of colossal debt, and thus the printathon that has to come on the back end of it. Defaults, things like this that are caused by refinancing. And this is why the markets are going to do well up until that point, because you don't have to refinance yet. It's slowly starting to happen, but the big sort of bombs go off later on down the road. And my best take on what's going to cause this crash is going to be to do with sovereign debt, because it just doesn't seem to be getting a bid here at all. And why should it? You know, this is a... let's use the yields. This is a move to end all moves. If you put this on log and percentage, this has been, which means that bonds have been in an uptrend for over 40 years. Bonds are now doing that, the yield's doing that. This is potentially an end of trend, which is a very clear downtrend. Move that was pivoted around March 2020's events. What do you now do with debt? Debt's going to continue to spiral out of control. Who's stuffed with debt? Banks, pensions, and everything in between. And this actually potentially is what has been termed by many what's going to cause the global reset. Because if money itself becomes, and you have all these runs based on the debt markets, on banks and things like this, then you know, what then happens when money itself gets devalued and we have these kind of what some people would coin third world problems, going to banks and not being able to get your money out in the likes of the Western world. It's going to be interesting. Maybe I should do an entire video on that. Let me know your thoughts in the comment section. On that note, guys, I'm going to love and leave you. This was quite an informative one. We're long and strong. You're going to have ups and downs. There's going to be data to watch. Until something changes, something significantly enough changes our opinion on the markets, you know, we maintain our position that we've hopefully put across to you guys well enough for you guys to at least use it to make your own decisions. All I've got for you in this video, guys. Thanks a lot for watching. See you in the next.